Okay, good morning, everyone. Today is Thursday, January 7th. Good to be with you guys for this live intraday strategy webinar on SB Trade Desk. Eileen, great to see you as always. Permendra, Minho, Bernard's in the room. Chris, great to be with you guys this morning. So, what a night. If I sound a little tired, it's because I was up for the majority of the night tracking these markets on the back of the move that we saw from the PBOC to reduce or widen that yuan exchange rate. We saw a decline of 0.5%. That's the largest that we've seen since August. And certainly, excuse me, roiled markets. I mean, you really saw equities turn over extremely heavy in Asia. Obviously, you saw me tweet last night. The Chinese markets were stopped out on circuit breakers. They came online 15 minutes later, got stopped out again. That closed it for the session after only 30 minutes of trading. That has continued to follow through. European markets also trading extremely heavy. U.S. futures heavy ahead of the open. Here's what it looks like on the relative performance for the greenback. Not too bad of a day. We failed again yesterday. We talked about this level at 12,204, which is the high day close for last year, the high day close for November. And we've made, ahead of yesterday was 10. Yesterday was 11 attempts to try to break through this region. And we failed to do it on a closed basis yet again. So the risk still remains. Nothing's changed. And despite the fact that you've seen some of the dollar crosses move in opposite directions, the index as it stands right now remains at risk below 12,204, especially on a closed basis. So we'll definitely want to keep that in mind. Also keep in mind that the momentum signature, 60 resistance, right? And that was actually at 60 earlier today. So certainly a level of which would offer some resistance if we're going to hold this high in price. On a relative performance, just to give you an idea, guys, of what's going on here. So this is the relative performance against the base dollar. If we drop this down here, let me show you what I'm doing. If we drop this down to the base currency for the yen, stronger against most of its major counterparts, only the euro and Swissy with strength here, but a really strong yen. Okay, yen is catching a safe haven bid. The dollar in some facets, and I'll show you in a moment, is also catching a safe haven bid. Gold is pressing a pretty big resistance right at 1100. I tweeted that chart last night as well. There's a lot going on. Quick breakdown of crude prices continue to really follow through as well. I want to take some of these comments right here. Crazy day, Mike. Good luck to all. Amir says, please go through the euro pound urgent. I'm currently in a trade and need to take a decision in a few. The euro pound cross, Amir? Pertinence always, or time restrictions will always rule, my man. I'll take a look at it for you right now. Euro pound broke a resistance region last night, and I was looking at this region. We looked at this yesterday in the webinar as well. Upper median line parallel of the formation that was holding essentially for the two highs they made at the end of December there. This was also the May high day close, the June high, and the October high, all at 73.86. Was really critical level. We broke it, checked it as support, and moved right off. I think from this region, former lower median line parallel may offer some resistance. You get a kickback from here, but by no means am I going to be willing to really turn over on this trade just yet. The interesting thing is that right now you're testing the high day close that you made for October, which was exactly almost in line with that high that you made in May. So you're coming into a little bit of resistance. I do think you can make a stretch into 79.80, 79, basically this median line right here, Amir, before it turns over. But just keep that in mind. The momentum is still pretty constructive on this, so I wouldn't get too aggressive on a short yet. I think you can get some pullback from here, but you finally make that stretch into 74.80, 74.90. All right, just a quick recap. I haven't been tracking this trade personally, Amir, but those are the levels I'd be looking at. All right, and then actually this fib right now is going to be needed to retrace to the high point. So we don't really have conviction. I'm doing this just for you right now, but you don't want to really work with this until you see a pullback give you a little bit more validation that's a high. All right, he says thanks. No problem, man. And Gary, also a question here from Gary, going back to the dollar, says, I'm a bit of a simpleton. Can you quickly explain why they closed trading last night? So Gary, there's something called circuit breakers, and what happens is when the market drops a certain percentage on a daily value, the circuit breakers kick in and halt trading. We have that here in the United States as well. It's really made to kind of put a curb on runs on the market where you see a real cascade effect. It can be very, very detrimental. So in an effort to pace markets, they've implemented these circuit breakers. Now, specifically in China, this is a new thing. It's only been in, literally, guys, I'm not making this up, it's only been in play for like 3 days. And here we are already with the second time this week where they've had to implement those circuit breakers. So it's there to slow the momentum, Gary, so that you don't have a quick tailspin in markets and see a massive 10-15% day. Don't quote me on this, guys, but I believe the circuit breakers for China are somewhere in the range of 5 and 7%. So the first circuit breaker hits at 5%, stops, halts trading, and then if you get another 7% move, I think it halts again for the rest of the day. Semantics, we're not going to really get into that, but Gary, that's sort of a defense mechanism for the markets that they've implemented. So it just goes to show you the severity, swiftness, and size of the move that we saw last night and that we've been seeing specifically over in the Asian markets this week. Gary says, wow, okay, cool, I didn't know that. Thanks for covering. Anytime, Gary. Great to see you in the room, man. So certainly the sell-off is continuing. Here's what it looks like in the U.S. Or on the equity boards right now, guys. So here's Europe. You can see the FTSE 100 in the UK is down almost 3%. CAC 40 down 2.87. DAX, here's the big boy, down 3.5% so far in the session. If we look at equity futures ahead of the open, 383 points expected down on the Dow, S&P down by 45 handles, NASDAQ with a sizable decline there as well. So broader risk is heavy. That means yen strength should prevail, broader support for gold should prevail, and the dollar is a little bit more of a mixed picture as we continue to see the index really hold this resistance. For the dollar index, here's what it looks like on the 30-minute chart. So I'm just going to move this to the side here. All right, it's getting a little bit messy as far as our scalp is concerned, but the levels are unchanged, guys. You're just getting a lot of push through. This is the high day close. Again, we talked about this yesterday, and this big region of resistance. So the momentum signature has continued to mark divergence all through those highs, lower high or equal highs, lower highs, higher high, higher high, higher high. So definitely the impetus is there to suggest that momentum is waning. Since the start of the year, I guess at this point I could put my 2016 marker here. Since the start of the year, you've had nothing but strength in the dollar, and this would be the consecutive, how many updates we've had in a row here. Okay, so today would be the 7th consecutive day in a row that we've had straight advances in the index. If we go back and look in time, when the last time we saw a 7-day consecutive rally, you gotta go quite a ways back for the index. Yep, keep going. Keep going. Right here. And that was in 2008 when everything was going nuts, right? So you saw that was a rally of 10 consecutive days, but you can see that even on the back of the 10-day consecutive rally, you saw a quick pullback and then a rally further up. Now, this is a little bit of a different scenario because of where we are in trend. You got a 10-day rally off of a major support or a major low for the year. Here you're in the exact opposite. Okay, you're at a multi-year high and you made a 10 or 8-day rally into resistance. So a little bit of a different animal here, guys, but the bottom line is if it breaks, topside targets are pretty clear in my view. You're looking at 12,250 is 100% extension off the December low. And then you're looking at a couple of different interesting marks here. A basic median line parallel that takes you up near 12,320, 12,319. And then a big confluence region here of some Fibonacci levels up at 12,353. Now, before we get all excited on the long side of the euro, the one thing I do want to say is this. We're heading into NFPs tomorrow. The minutes that we saw released earlier this week showed a very interesting dynamic, and I wrote about this a little bit in yesterday's piece, guys. At the end of the day, it just suggested that the committee does not seem as quite unanimous as we were first led to believe with regards to raising rates, right? There were some that were suggesting maybe we should wait for inflation. It was a close call, not very comfortable with the inflation target yet. Long story short, that was before you saw China fall to pieces. That was before the market opened and you've seen a massive, massive sell-off in risk, right? That was before you're getting the conflicts that are going on both in Iran and Saudi and now even North Korea. So there's a lot for the Fed to digest. I just want to say the strength in the dollar based on higher interest rates in the first quarter might be curbed as market participants really start to price in a new trajectory for rates, right? The Fed is not going to come out and really press the normalization process as all this is going down. So just want to put that out there. With the trade at resistance and a 10-day or 8-day consecutive rally at this point, we're pushing 7. You want to be very cautious. I still do think that you face downward pressure against 12,204 in the dollar index. Questions on the index before we move off? Again, at its inception, equally weighted Euro, Aussie, Sterling, and Yen, the most liquid, foremost currency or foremost traded currencies versus the greenback. Okay, Bernard says, Michael, can you go over Euro dollar for short scalp around 108.80? Yeah, so 108.80 is something I'm looking at too. If there are no other questions on the dollar, we're going to go ahead and move into yesterday's report, and we were highlighting that Euro setup was the first one. So let's do that, Bernard. I also got an interesting picture for the DAX for you. If you're still looking at that, Bernard, we'll take a look at that in a little bit as well. Here is Euro on the daily. So 108.80 is a very interesting area of resistance that we'll be looking for. I want to bring your attention to the fact that the open for the year is 108.72. You have the upper median line parallel for this formation off of last month's highs. And on a near-term chart, you have some interesting stuff I'll show you in a moment. Daily momentum, you're looking at that 50 pivot coming up on tap. The major premise for the trade on this yesterday, guys, looking for the upside thrust here, was this confluence support that we rebounded off of. Former upper median line parallel, and I know that this formation has been kind of messy on the upper bounds for sure, but the long story short, on a break, retest of support, another median line parallel I was looking at is this. Okay, and this seems to be one that's more operative in near-term price action. So that gives us resistance a little bit higher from where we are right now, just above that 108.80 level. The 30-minute is where the clarity starts to come in. Okay, so on the back of that minutes release yesterday, you did get that topside pop, taking you right through an embedded median line. So this is the larger one that we were looking at on the daily chart right here. An embedded one just off that last high in December was holding price action very well into the close of trade yesterday. And the initial focus was on this break to reach this first threshold, which was 108.30. And that was the former 618 extension off the high, upper median line parallel. You came just shy of that last night. You pulled off real tight. You held 40 in momentum on the thrust here, taking you right through. I am looking right at that level, Bernard, for a possible entry here on Euro. Okay, it would coincide very well, with the dollar sort of starting to hold its position and giving us a little bit more of a pop higher, another test of that resistance before breaking through. If this breaks through and the dollar strength really starts to carry on, then look for that short to really give you a much longer term play, guys. One thing I do want to say is that in these conditions, as far as us as near-term traders, we want to be a little bit more, we want to lean our exits a little bit more towards a position style trade. So the reason I say that is because we were in some beautiful positions yesterday that we closed out way too early. Now, I always tell you we want to be very disciplined. If we're looking for 26 per scalp, that's what we're taking off. But on trades like what we're seeing here, guys, where there's massive swings in broader sentiment, broadly speaking, you're seeing it in bonds, you're seeing it in risk assets, equities, and currencies. It's prudent just to kind of take a little bit more of a position approach. So I'm looking at that 108.80 level with great interest. I'll be looking for short triggers there. You are marking some slight divergence here with that new high that you made in early European trade, the oscillator making a lower high sub 70. So the hallmark is there. Momentum is getting tired, Bernard. I see where you're coming from, and I want to see that stretch a little bit higher to see if that upper median line parallel can offer us a nice entry here for the short. So Eileen says, can you explain position trading a little more? So Eileen, position trading is where you take a little bit more of a longer term approach. And instead of the all-in, all-out mentality, you're more adjusting a core position. So if I take a short here, the market starts to move down. I have a lot of conviction of a larger move off this region, right? If we're looking at the daily chart, let's say I want to play a move back into that 107 level, your core position is always on, right? It's a different style of trading, and I don't want to sidetrack too much, Eileen, but your core position is always on. As it comes into this region, you take a little bit of the position off. As it rebounds, you add to the position, and you sort of have a core position building all through the move. You're never really out of it, right? You're in a position, you're sort of just managing where your average cost is. It's a little bit different style of a trading. Where we will usually scale out of a position, Eileen, position traders will actually also look to add to that position. Right. You got it. It says, okay, not just some of taking some off as the move in one direction. Right, you got it. All right. So, Bernard, I'm with you, man. I want to see a nice trigger here. Here's what the 5-minute chart looks like. Let's take a quick gander at what that's doing on the euro. Here's the 1. Let's put some color to this. Here's your trigger where you'd want to sort of abandon the short idea in your term. And we'll see if we can't get that last stretch into the open of U.S. trade. Looks good. Looks good. Remember, 108.72 is what we're testing right now, or what the high exactly was, is the open for the year. So you should be looking for resistance in this region as we come into the U.S. Open for sure. Okay? That said, guys, at the end of the day, we got to plan for both sides. If we do breach the top side, I'm not really going to be looking to play this aggressively. If there's a clear-cut trigger, maybe I'll dabble in it. But it's really 109.25 that's going to be the last-ditch effort and the near-term bearish invalidation. I mean, a break above this, you're looking to play longs. Why is that so important? That's the simple 618 retracement off the decline off the highs here. And that's also the December high day close. Now, I know it doesn't look like it, but here's the December high. It was on the 15th, and here's the close of that region, 109.24. Where's the 618 retracement of the decline? 109.25. So that's really the breakout zone that if we get on top, forget the short side of the euro. I want to keep looking much, much higher. But as it stands right now, yeah, I'm looking for some short entries. Any questions on the euro before we move off? Here's what it looked like yesterday. We were just approaching that region. We've tagged that now, taken that out. Near-term resistance and bearish invalidation level. What would turn us bullish? A move above 109.25. Bernard, does that help? I do want to just touch on Aussie yen and Kiwi yen. I got stung on one of those on a break-even trade. It was a beautiful trade. If I would have just held it, I got too excited with all the volatility to bring my stop too close real quick, and I got hit out at break-even. I shaved some off on Aussie yen, but it was pitiful. But at the end of the day, the levels are still pretty clear. The break and the continued move lower really is just on pace to hit the next major targets. So we'll go over those, and then I do want to cover all the dollar crosses heading into NFPs tomorrow. So here's what Aussie yen looked like yesterday. Bernard says, thank you. Can you go to the S&P if time? Yeah, for sure. S&P, Nikkei, and German 30 I got written down, Bernard, for you. So let's just run through these real quick. Here's what Aussie yen looked like yesterday. First, I want to show you what it looked like on the daily chart. Okay, this thing has ravaged all the support targets that we've looking at, and the basic next target that you're looking at, the low close from September, is basically where we're sitting now. Longer dated 764 retracement takes into 81.75. Here's what the scalp looks like. Nope. And here's where we were yesterday. Okay, so we lowered our bearish invalidation level from 85.47 down to 84.72. At this point, we're going to go ahead and lower that again down to that 764 retracement at 84.18. That's going to coincide very nicely still with that basic trendline resistance off the highs. The lows that we made, like I said, for September is basically what you're checking here at 82.16, and you're seeing some divergence in momentum, price action making a lower low, the oscillator holding those lows, and you could see a little bit of a rebound here. Yesterday in the note, guys, I said I wasn't really too keen on chasing this, and I did stalk it for quite some time. I got on the long side here after we dipped here and held. And then again, like I said, we kind of just got stopped out at just a couple pips profit. Kiwi yen, same type of deal. So I'll take a break-even stop as opposed to a loss any day of the week, but it was just a stab at a retracement towards 83.68. Long story short, once we broke that low, next target down is 82.16. That's sort of where we're sitting at right now. So this is where being in a more position trade type of mentality would have been a little bit more beneficial for us, okay? And a trade like this where it's a one-directional really run, you really just want to be looking to kind of play the directional trend instead of getting the counter trend positions in. If you remember earlier in the week, we were long on Aussie yen here, and that was yielded a very nice move. But on a move like this and on some of the panic that you saw last night, you kind of don't want to fight it. So at the end of the day, I'm out of Aussie yen. Here's what it looks like on the weekly. It's a massive, massive range. You're heading into the 2015 lows. I don't want to get on the short side here. And as far as trying to call the rebound, which I do think from a personal standpoint, I do think you get some near-term rebound on tomorrow's print for NFPs. At the end of the day, we would need those triggers to manifest themselves. The weekly chart, okay, just to give you some guidance, sliding parallel for that move and resistance off the 2011 high is right there. Is right there. Momentum on a weekly basis, that trigger break that saw that run into 90, into the close of 2015, being checked as support. So I just, everything happened a little bit faster than I expected. Again, as I noted earlier in the week, guys, you might see this chart published on Daily FX as the trade of the year for 2015. I do think this is going to see a lot more downside to go. Bottom line, it's a downtrend at support. All right, wouldn't be too surprised to see a rally here. If we get a rally back towards these levels, I'd be liking to get back on the short side. But as it stands right now, I still think the risk is for a push higher off of those lows from last year. On a continuation lower, next downside target is a 50%, and this is big off the 2008 lows. That takes into 80.16. Any questions on Aussie yen? So just lower that bearish invalidation level to 84.17. Kiwi yen, just a quick note on that. Very similar setup on this one. Here's what that looked like yesterday on the daily. Okay, we were sitting right here. We were talking about that support to look for a rally to sell. You didn't get much of a rally. In fact, we checked that 78.90 level again as resistance, and it held. So that was pretty much your only opportunity to get back on that one. Here's what Kiwi yen looks like on the 30-minute. This was the last opportunity. You saw momentum fail at 60. Trigger wasn't really the cleanest, but here's a quick dip and pivot around that 77.80 level. I'm not really, again, looking to get on the short side from here, guys. You're at a major low. It's very stretched. Momentum is giving divergence, holding those lows as price action makes lower lows. So just use some caution here. Be prudent. I don't want to get caught chasing. This is a 5-day stretch of quite a magnitude here for a pair that typically gives 100 pips on a daily basis. So a little bit more of a cautionary approach. I'm sorry, guys. I wish I could be a little bit more aggressive on the back of last night's move. But when you get these huge one-directional surges on any type of central bank intervention, major developments, all of this nonsense that's going on, you kind of want to be prudent, especially with the near-term strategies. All right. Let's jump into all the dollar crosses that you guys want to cover. I'm going to go over the equity indices really quick for you, Bernard, first, and then we'll go over prospects for non-farm payrolls. So here's what the S&P looks like right now. You might have seen me tweet this chart last night. So if this formation is the formation that's in play, which is what I've been sort of working under the assumption of, that break yesterday, let me take that back. This was the support structure that we were looking to hold. My favorite types of conviction overlaps. You have 100% extension off the highs. This is actually from the high of December. You have a 618 retracement off the lows. Here we are breaking right through. Now I understand that if you take this retracement and you kind of stretch it down to the lows here, it looks a little bit more like you're tagging the 618 right now. So I am mindful of that. And in fact, this is what we'll do. There we go. We'll leave them both on there. Okay. Still will be looking for resistance near 1969, 1964, a break lower, and the major key region here is right here, 1618 extension from the November highs, and that takes you to 1923. Coincides very nicely with basic trendline support. Mark, if you're in the room, I saw you tweet a chart last night using this trend line, and I understand that it confluenced on the same region I was looking at. I got you right off the bat. But like I said yesterday in the webinar, I'm very hesitant to use these really emotional stretch lows and highs. So I'd rather work with a more gradient slope. And in fact, if you take this slope, it's actually the same slope for the broader structure that was holding the S&P for over a year. So I'd be much more comfortable using that slope there. And that intersects the 1618 at 1923. Okay, watch the close today. This will be the first 50 break in momentum that we've seen since late September. That saw another sizable spill into support before we turned over. We'll want to see this close here today to continue favoring that downside bias. As always, guys, again, remember you can always take a snapshot of any of the charts that you see here. So if you need these for your reference, just click that camera button in the top right-hand corner and feel free to take a quick snapshot of any of the charts. Okay, the Nikkei was the next one that we looked at last night. Here's the Nikkei was looking like as that data was coming out. So I tweeted a chart when we were trading here saying this would be a big break. And to be quite frank with you guys, it pulled up before I went to bed last night. I thought I was going to hold. Here's the travesty break. Next key support right on tag. It's a 1618 extension off the high. Confluence with a 786 retracement off the low. 17,490, 17,561. It's exactly where we're holding as support right now. Okay, I don't want to stress this, but even if you do put on a quick pitch, something like this, to guide near-term price action, again, you can see that the median line here was holding as support. You've just broken below that. The next downside target of like significance, I would say, would be right down here. Basically, you're looking at those lows. This is the 2015 range, guys. This retracement here is of all of last year's price action. So now testing near-term support on Japanese yen, on the Nikkei 225. Look for support here. Could get a little bit of a rebound, but you want to stay bearish below that 618 at 1888, which again is going to be our near-term bearish invalidation level. Last but not least is the German 30. And Bernard, this is what the DAX looks like right now. I just wanted to highlight one thing. I don't really have us at a major support structure yet. The major level I'd be looking at, or the next level I'd be looking at, is right here. 9,887. You saw a nice pivot there in price back in September, the opening range low, which broke and gave us that September range low. Then you had a breakthrough in October and a test of support. So We've probed through it. Watch the close. 97.57 is going to be the real level I'll be want to look at for support, and that's a basic 786. On this trade, a little bit different in that I kind of want to stay bearish below here. You got the swing lows from December. Again, that 618 lower median line parallel kind of keeps the focus lower, sub 10,000, 168. So a quick recap there of some of the equity market trades on the SPX, Nikkei, and German 30. Feel free to let me know if you have any questions on those. Guys, if you have any questions or specific pairs that you want to throw out, feel free to type them in now. We'll go ahead and take a look at those for you. But I do want to take a moment and go through all the dollar crosses. So Aussie dollar, another one yesterday, I was all up and down in, both on the long and the short side, actually, for this one. So here's what Aussie looks like. And again, this was all happening really quick as far as the events yesterday, so I didn't get much time. I tweeted this chart yesterday. The 78.6 and 100% overlap. It's not 100. It's actually just the lows. So 70.31 to 70.37 is what we were looking for a support bounce. So I was holding along from this region. We're only looking for about 22 pips, so we did eventually get it, but the thing turned over pretty heavily. Momentum failed at 60 in European trade, and a break of the lows now takes us into an area of much more interesting support. And that's basically the confluence of the 1618 extension. This is from the December high that you made on the 4th in early December, and an 88.6 of the entire advance off the lows. If I can get this zoomed out far enough, there it is, off the lows from October. Or this is late September, excuse me. So nice confluence region of support, nice pivot in price. Next break beyond here, guys, you're looking at the lows straight up from October, and that comes in line close to the lower median line parallel here today. But again, the divergence that you're seeing on broader momentum, the dollar at resistance, I'm hesitant to press this any lower. So another type of scenario, Eileen, where if we were just trying to play this on a little bit more of a core position, those initial shorts that we took earlier in the week would have panned out to be a nice little play here. Here's what Aussie looks like on the daily, by the way. I also do want to point out just basic median line parallel also comes into play right at the lows we made today. And this is just a parallel for the structure that we've been in for quite some time on the Aussie. This is from the 2013 swing high that he made in November. Pivot, pivot, support, support, pivot. Getting a little messy. Sliding parallel of that same slope. Right here. All right. So on this pair, again, could get a slight rebound from this region. You'd be looking for resistance, again, right up near 70.37, 70.40. At this point, we want to bring down our near-term bearish invalidation level to that pivot at 70.65. Any questions? Excuse me, losing my voice here. Any questions on Aussie dollar? Eileen saying, I've sometimes gotten into trouble position trading when I wasn't supposed to, adding to losing trades. Think of the past. Yeah, God bless you, Eileen. Eileen, adding to losing trades, it's a pitfall that a lot of traders fall into when they first get started. We've all been there. We've all been there. Christopher Hudson says, when you have time, Sterling Oz and Sterling Key. Sterling Oz. Sterling Key. Sure. Sure, Chris. We'll definitely take a look. Let me just get through these dollar pairs. So this is the Aussie looking for near-term support here. Rebound, resistance near 70.37, 70.31, this region right here. And we'll see if we can get back on the short side from there. But again, heading into non-farm payrolls, major event risk. You're going to see liquidity start to thin, specifically on the back of a day with such exhaustive volatility like the last 2 days that we've seen. So be prudent heading into tomorrow, guys. Let the data come out, filter through that first week of trade, and let's get a little bit more clarity on the broader dollar crosses. Kiwi dollar looks like this, also coming into a basic area of support comprised by the 618 retracement of the advance off that November low. I think you have a little bit lower to go here as well. I would love to see this thing drop towards those lows from December, which comes in line very nicely with the lower median line parallel. Here's the 30-minute. Nope, that was the difference. Got the wrong high here. Sorry about that. There you go. Building divergence all along the lows. Building divergence. Support. Risk for an upside thrust here again. I'll be looking for, if we do get some conviction long triggers against that low, just for a scalp towards like 66.89, 66.99, this region. But broadly speaking, you'd want to stay bearish below that median line off the highs from, what was that, the 13th, 15th of December. Matches with the idea or the concept of a small pullback in the dollar. Kiwi rallies into resistance, find a better position to get back on the shorts. Last but not least, we went through Aussie, Kiwi, Euro, Sterling, and Yen. Here's what British Pound looks like heading into NFPs tomorrow. Haven't touched this one at all. As I told you yesterday, guys, I'm just not interested in playing the pound right now. It's just a slow meltdown, and every support level that we've been looking at has just been completely failing. Not even much of a rebound to get back in. So here is the 1618 key support that we were looking for alongside the lows, 145.64, 145.95, came in line with the median line parallel, and we still went right through it. We're trading there right now. If you put a gun to my head right now, I would say look long. Okay, look for a rebound back towards 47, maybe 47.20 to get back on the shorts. With a break of this low, there's really not much targets on tap, guys. There's a lot of room to the downside until like 43, basically. Here's the daily. $43.90 soft target, and that 2618 down at 42.47. So there's a lot of room. If we break, this is like the last ditch effort here. So looking immediately higher than the pound, and then we'll be looking for that rally to offer some short exposure. But right now, you're at support. Nope, Gary, you didn't miss it. We're about to jump into dollar yen next, my man. Eileen says another time to buy some BBP notes for travel later. Christopher says, Mike, on Kiwi dollar, I have a 5-minute trigger that suggests longs against session lows. Let's take a look. Yeah, so there was actually a trigger that just gave out not too long ago. This is the one that I would have been working with as an operative trigger. That would have been a really nice very tight stop against the low that we're looking at as that major low. I do like I said, guys, I like the rebound here for sure. I'd like to see the U.S. Open start to clear out a nice range for us, but I think you've missed the trigger already on this. Was it a 5-minute trigger, Gary? Or who was that, Chris? Yeah, it was a 5-minute. Let's take a look at the 5. Yeah, same on this, right? So this would have been This would have been your trigger to do here. So I don't want to go chasing. Remember, Chris, it's extremely important that we stay prudent and that we stay disciplined to our strategy. And our strategy dictates that you can't really take a risk to reward with more than 1-to-1. Just doesn't make sense. So my problem here is that your stop would need to be against the low, and that's going to stretch you at this point at like 35, almost 40 pips. Quarter of the daily TR is 21. So on a pullback here, look for this momentum signature to find some support at former resistance, and then a possible another long trigger on a 1 minute would put you back on the long side. I do like the rebound. I like the rebound for sure. Might have just missed that one. Watch for a breakdown here and formulate a new trigger on the long side if we get that pullback. But I want to try to get it so that the stop is within 21 pips if possible. Does it make sense, Chris? And that's how I look at every trade. If I see a trigger that's panning out and I want to get into the trade, great. Can I get in here with a quarter of the ATR stop? No, can't take the trade. Yes, jump right in. Jump right in. I mean, long on a retest, not a current price is. I am very cautious on the Kiwi longs. I actually like it short. Chris, I'm with you. The broader trend is the downside. No one's arguing that. But this is an intraday webinar, right? We're looking at just what's the near-term price action saying, and near-term price action certainly thinking or suggesting to me that you're getting some exhaustion here. With all the divergence we've been putting in, with price coming off of a nice support confluence, wouldn't be surprised to see a nice little rebound here. And that's the whole nature of the strategy, is to take advantage of those little bumps and little reversals in price. Now, typically we're a lot heavier leverage than we would on a normal trade, but that's where the strength of the strategy comes through. Make sense, Chris? Does that help? Of course, thanks, he says. All right, cheers, mate. Farouk, dollar CAD. I almost forgot about dollar CAD, but let me do the yen first, because the yen, oh boy, the yen. It saw quite a day yesterday, right? Here's what the yen looks like. You saw a break of the 1618 extension that we talked about yesterday, 1803. This thing's sailing through support targets like it's nobody's business. So a median line structure that could be in play off the high. I just tagged this on. I don't really want to stress this right now. But if this is in play, the lower median line we want to see if we close above this. Momentum is at 30 support, so you want to be cautious of trying to chase this down any lower. We'll tend to move, interestingly enough, guys, when you see risk off, the bid that the yen gets, specifically this week, has been much stronger than the bid that the dollar gets. And what I mean by that is that yen strength or yen appreciation will outweigh that of dollar appreciation, even though the dollar is still getting some of that haven play. So dollar yen has been on a straight down course since the start of the year. I mean, look at this thing. Scalp is really messy, so I don't want to stress this chart either. The abomination doing what it does best. But, as we always say, a downside break of a descending channel formation. If we take this out of the picture, a downside break of a descending formation, oftentimes the sharpest part of the move. So very similar scenario, guys. It's like a broken record. I feel like a broken record today. Some of these pairs, not necessarily the yen as much, but some of these pairs coming into some support. The dollar still holding resistance. I'm talking about the dollar crosses here. And we'll have to see what NFPs gives us. If NFPs come out, let's go over a quick recap of what we're expecting tomorrow. NFPs are expected to come out at 200,000. Just make sure we haven't got an update on the back of yesterday's strong ADP figures. Okay, so no, we're still at 200,000 expectation for tomorrow's non-farm payroll. Unemployment widely expected to hold at 5%. Pay close attention to the broader labor force participation rate. That popped up unexpectedly last month, which is a very good development. And also the average hourly earnings, we'll want to see that start to pick up as well. Specifically, if we do see a very strong print here, the laggard of the Fed's dual mandate of price stability, i.e. inflation and unemployment, has been price stability. So average hourly earnings goes to speak to that to that inflation picture as well. And if we don't see wage or wages increasing, then that's a bad sign for the economy, and that suggests again that the inflation picture is still a little bit more stagnant than the Fed would like to see. So those are the things that you want to really pay attention to heading into that release tomorrow. If we get a blowout read, let's say 270, something ridiculous, next topside target, like I said, 12,250 is going to be an exact 100 off the high. And if this is the move, or if this is the break that you're going to make, there's nothing above that until 12,319. If you get an extremely weak number, meaning sub 150, you would start to think expectations for higher rates are going to get kicked out past the first quarter. If that starts to happen, you might see the dollar really get back a little bit more, looking for support at the 618 of the advance, and that's 12,134. What's our bullish invalidation level? If you guys aren't sick of hearing it, guess what's in play again, guys? 12,123. The same level that we talked about ad nauseum for the last 6 months of trade last year. The April high day close. It's a clear pivot in November. We played all around it in December. It's also right below the monthly, yearly, weekly open, and that's going to be our near-term bullish invalidation level for the dollar index. So we're clearly mapped out heading into NFPs as far as what we should be looking for on the index. The near-term picture, if you go to the intraday page, guys, that's unchanged from the 5th. So the same levels that we highlighted here on the 5th are the same levels that we're playing on for the dollar index as it stands right now. Okay, all we did here is just adjust that retracement to the new high that we made. All right, dollar CAD for Farouk. Here's what dollar CAD looks like. Obviously, if you can imagine what's happening in the oil market getting slaughtered here. So quick look. Obviously, U.S. oil has been making mad headlines all night long. I just want to say one quick thing about oil. I don't want to call a low. I'm not necessarily on the long side of it, but worth noting the broader encompassing operative slope, the operative slope off the September-October highs. If you just take a sliding parallel of that same slope to the low that you made in December, it was a perfect tag up support today. So that leaves the risk for a rally back towards the 36 handle. And on a dollar pullback of magnitude, that's where you'd expect to see some resistance. By no means is this thing going to be on a constructive path just yet, in my opinion. You broke some really key technical levels here. I don't have any levels on a Fibonacci basis below here. You're basically just working the trend lines beyond that. And a break lower, you're basically looking at 30. There's really not much ahead of it. It's like an 11-year low, guys. So with that picture in mind, dollar CAD, not too surprising, right? Crude weakness, CAD weakness, dollar CAD strength. So I don't really have a very clear-cut picture of confidence that I'm working with. I want to clean this up for you guys just in a moment. I just want to show you this was the operative slope that we were working with all the way till that break in October. We're kind of getting messy with it here now, so I'm going to just remove it just for the sake of clarity and highlight this basic channel. And that puts us at resistance basically right here. Break higher, 142 is the level to look for, 143.20 is a soft target beyond that. Key support, 137.24, 137.60, and this is going to be the break that would shift the focus to the downside looking for channel support. But right now, it's an uptrend at resistance. So all these pairs, Aussie, Euro, Euro up is at the resistance on the near term for the rebound. You have Aussie dollar, which is looking at support on the pullback. You have dollar CAD, which is looking at resistance, right? You have the dollar index, which is still testing resistance. So on a break, guys, the plays should be pretty self-explanatory on tomorrow's release. And on a reversal, if you do get some short triggers here and the dollar index holds this critical high, look higher in the euro dollar, look higher in the Aussie. Euro would be the least one I'd really want to get aggressive on above 108.80. But if we get a pullback here and you see the dollar turn around, that's still going to be the level to keep in mind. I don't know if we're going to get that entry, Bernard. Let's see if we can get a pull higher here and heading into U.S. trade. Remember, U.S. markets haven't reacted to the whole debacle yet. Futures markets are showing a very, very, very sharp open lower for U.S. equity indices. Hey, David Fernando says, can you refer back to NFP news tomorrow while looking at the Eurodollar? What would be the expected reaction based on positive or negative news? So, David, I'll definitely do that. I just want to premise it by one thing, guys. I really don't want to make it a habit of saying, if this happens, look for this, or this happens, look for this. We're guided by the technicals. The technicals are what price, I don't know the words to say. Price is the only indicator that never lies, right? So I'm always going to be prejudiced towards what the technicals are saying. So, David, I just want to put that out there, right? The reaction that you see to the data is always going to be a deviation from the expectation, not really what the data in and of itself means. That's irrelevant, right? It's how far off the deviation is. So this is what I would say. If you get a very strong print and the dollar sells off, or the dollar rather rallies extremely hard, you want to be short the euro, right? But I'd want to be short the euro from a good position. I'm not going to just jump short euro dollar. If you get a strong print and you see sort of a spike down in the dollar, a lot of people may be hedging their bets right ahead of the release. A lot of times you'll get a spike down the dollar. That would be a great opportunity on a spike higher in euro to get back on the short. I always look for the initial reaction to be counterintuitive to what you think is going to happen. So if the dollar, if the print comes out strong for the U.S. economy, the dollar pulls back all of a sudden, you want to buy that dip. On the dollar index specifically, if it's a mediocre trade and the thing surges higher, I would look to sell that. I would look to sell that because you're already stretched on a 10-day or 8-day, 9-day rally. I'm sorry, I keep forgetting what are we at. 7-day rally. Tomorrow would be 8. And it's very rare that on the top of a trend, at the top of a rally at resistance, that good news will push you through without some sort of meaningful pullback, meaningful recovery. So you look for the initial reaction to sort of be counterintuitive and then look for the broader trend to take place. With stuff like NFP, it's a little bit easier than playing than FOMC release or interest rate decisions, because in there, the devil's in the details, right? You got to see what the current statement is saying, how that statement is different from the previous statement. With NFPs, it's going to be a quick, hey, what's the deviation off the expectation? Play the reaction. Gary says, can I just ask what your current dollar yen bearish invalidation level would be? Gary, what time frame are you talking about, man? Longer term on the daily chart? David Fernandez says, got it, thanks. Hey, cheers, David. I hope that helps, man. It's hard for me to kind of just tell you if this happens X, if Y happens Z. But I just know the levels that we're at, and it all is determined basically on where price is trading. If price is trading at resistance and you see that probe in the dollar, David says, yes, I got you. All right, cool. Dollar yen daily, Gary says. Here's dollar yen daily. Oh, bearish invalidation. It's far from where we are now. Gary, for me, bearish invalidation still isn't basically until 1988. I know that's a big stretch for dollar yen, which is typically less than 100 pips on a daily ATR basis, but that's really the only level of magnitude that I would be paying attention to. I would be looking for resistance at the low day close from October, which is very close to the highs that we made today near 1880. But this is what would need to be the bearish invalidation level, in my opinion. That's actually the 2015 Open, by the way. This is exactly where we opened last year. And we opened this year just pips higher. So almost a yearly doji. I know you guys talked with Jamie about that, or he will talk with you guys about that at the midweek strategy webinar later today. But for me, that's what the pivot would be there. Also take note of a couple of different median lines you have off the high from early December. You have the median line off the August high, right? And all of those all line up with that 2015 open. Gary says, love it when your levels match what I was thinking. Right on. Cheers, mate. Nothing's better than getting your idea validated, right? It gives you a little bit more conviction on the position, for sure. For sure. So we went through all the dollar crosses. I do want to just leave the table open for any other last-minute questions here before we wrap things up. Gary says, makes me feel taller. Cheers, Gary. Guys, use some caution. One thing we don't talk about enough in the webinars is use of dynamic leverage. I do want to just, give you just a moment of caution on these releases, specifically with all this volatility. You can really get carried away, and even if you're on a really hot streak, which you can catch those in these environments for sure, you just want to make sure that we're being a little bit more mindful of our leverage as we head into these event risks and major market swings. So it's still early in the year. It's still early in the month. We're just getting started, and it's promising to be an awesome year. So uh, let's try to keep some powder dry. FTSE, if you have time and ho, let's take a look. I actually haven't checked that out today. FTSE, FTSE, FTSE. All right. Bear with me one moment. Just do some on the fly for you here. That looks right. Yeah, I mean, look, on trendline support alone, you want to be mindful here of support for the FTSE. That's just basic trendline support off the August low. I wouldn't really be worrying necessarily about the 786 retracement per se, but just the swing lows that you made, and the close low actually comes in at 5,870, and that's just beyond the lows that you made today. Also, as it stands right now, you're getting some divergence in momentum. Look where today's close is. If the close is lower than the close that you made here on the 14th, that'd be some pretty nice divergence. Remember, when you're looking for divergence, actually the best divergence signals are typically the ones that are closer to 50. Or putting it another way, the closer the divergent points are to the 50 level, typically the stronger the signal. So I want to see what today's close looks like. You're heading into support, a break below this. You're looking at that 1618 extension down at 5,740. Okay. All right, so you got that 50 retracement there as well. I don't want to necessarily stress that because we've already gone through it. And let me just also tag this down to that 2008 low. And that puts a basic 38 right in line with that. Okay, so that's what I would be looking at, Minho. If you see a break below that 5,870 level, you have a pretty decent confluence at 5,725, 5,725, 5,740, the 1618, and that 38.2 retracement. That's a nice confluence longer term, so it might be a much bigger level in price. But near term, I'd be mindful of support at 5,870. All right. The only thing I don't like about this is that momentum is completely range bound for the last like 5 months, 40, 60, 40, 60, 40, 60, and so is price action. So on its face, putting aside all the political pressures and all the external factors that you're looking at in the market, it's a simple range at support. Okay, and a break of that range, you know what to do on range support break. You look for a measured move of the wick to the downside. That's much lower than 5,740, but this would be the initial target. Make sense? Quick breakdown there for you, Minho, on the FTSE 100. He says, good, got some picks, we'll study. Cheers, brother. All right, there's Aussie also coming off support. Kiwi coming off support. Sterling. When this thing finally does make a move, we'll be on it. Until it does, I don't even want to look at it anymore. It just makes me mad. So, guys, we'll wrap it up there. If you have any questions, again, Jamie will be on today at 1 p.m. for the midweek strategy webinar. We finally got Jamie up and running again. He's feeling better, good to go. So we're glad for that. Thank you all for your comments, by the way. I sent those all through. And that's it. We're going to wrap things up here. Best of luck trading tomorrow, guys. Stay nimble heading into tomorrow's release until we get it. 200 is the expectation, 5% on unemployment. Again, don't forget Jamie at 1 p.m. later today. Best of luck trading, and we'll see you next week. Cheers.